The U.S. national debt has just crossed a staggering milestone, more than $38 trillion. That's right. In just a few short years, the government's borrowing has exploded at a pace few could have imagined. To put that into perspective, the national debt stood at around $30 trillion back in February 2022. Now, only 4 years later, it's expected to surpass $40 trillion sometime next year. This kind of debt growth doesn't happen quietly. Every trillion added represents massive spending commitments, from social programs and defense budgets to interest payments on the debt itself. In fact, according to financial analysts, the U.S. is now spending hundreds of billions of dollars every year just to cover the interest. And as borrowing costs rise, that number will only keep climbing. All of this has triggered growing concern among economists and investors around the world. Some say it is no longer just a budget issue. It is a signal that the global financial system is shifting. When people lose confidence in a currency backed by debt instead of savings or production, they start looking for alternatives. And that's exactly what's happening right now. Gold, long viewed as a hedge against inflation and instability, has recently broken above $4,000 per ounce, setting new records. Experts suggest this surge is being fueled by investors rushing to protect their wealth from a weakening dollar. As more countries diversify their reserves away from the US dollar, the demand for gold and other tangible assets continues to rise. This isn't just about numbers on a screen, it's about trust. For decades, the dollar has held its position as the world's dominant reserve currency. Central banks across the globe have relied on it for trade, savings, and stability. But with the national debt ballooning and inflation pressures mounting, that confidence is starting to erode. Some nations are beginning to settle international trade in other currencies, signaling what could be the early stages of a global financial realignment. If this trend continues, the consequences could reshape the global economy. A declining dollar would mean higher import prices, more expensive goods for American consumers, and potentially higher inflation. Meanwhile, commodities like gold and silver may continue to soar as investors look for shelter from the storm. The message is clear, the numbers don't lie. With the U.S. debt climbing past $38 trillion and showing no signs of slowing, the world is watching and preparing for what could be a historic shift in global finance. Disclaimer: this story is for informational and educational purposes only. It is not financial, investment, or trading advice.